Good day. This is the Eye of the Storm podcast with the weekly technical picture for the S&P 500 being recorded on Sunday, June the 2nd, 2024. I am going to start on the cash market. So I change my chart here and begin to just kind of overview what took place last week. The correction, which is still ending up being a minuet fourth wave, did go pretty deep, did not break any rules, got, within 20 points, but didn't break any rules. So therefore, I'm leaving it as a minuet fourth wave. So let's just kind of review the whole picture here and see where we stand. Now, first thing is that I'm keeping the count as the preferred count, but I want to, again, in this area, also bring in some additional possibilities, but that don't carry as much weighting as they do over in the NASDAQ. And that being that the primary B wave, which of course is now the alternate being brought forward in the NASDAQ, makes much more sense in terms of what's left to do. Now here, we seem to be a little bit different where that the 1.382, which is that B wave resistance level, sits right here at 53.25. Now the market has been slightly above that level, dropped back below, and now is kind of working its way back up to it. Now, if the market were to kind of somehow finish itself up, it seems like it will break it. So it leaves the market back in that this is the primary fifth wave and likely will get to higher levels than what we're showing for this B wave. But I'm going to leave it there for right now, just as a reminder, and let's see what the market does in and around this level. So that takes care of just taking a look at that at the alternate count versus the preferred. So back here on the preferred, we're in a primary fifth wave up to complete. Now that primary fifth wave up would then complete the cycle third wave. So that all remains the same. Now the internals on that, we have intermediate 1, 2, and it looks like we're getting ready to put the finishing touches on minor wave 3, which would then suggest an additional drop down with another run up to finish intermediate wave 3, another drop down, and another ride up. Now that is in somewhat a little bit of conflict with what's left to do in the NASDAQ. Not to say that they have to follow exactly, but I think that we're going to get pretty close to finding out which is which here as we enter into June and then into the summer months. Because under this particular count, I would be expecting some fireworks to the upside. So there has to be enough happening within the market and what affects the market to propel that type of a move. Now, not saying that it can't happen, but we started to get somewhat, a little bit of relief from the PCE data that was put out on last Friday, in that the market is starting to embrace that inflation is loosening its grip accordingly to the PCE data. So we'll see how far that all gets. Now, starting here, so we have intermediate 1, 2, minor 1, 2, minuet 1, 2, or excuse me, minute 1, 2, and then minute 3, 4. So this correction coming down was for the minuet wave 4, looks complete. And so we're going to drop down off of here. But here we have, just to kind of go over the Fibonacci sequences that are associated. So I'm labeling intermediate degree in a yellow. So the yellow fibs here are related to here and are related to the third wave, the intermediate third wave. So right now we've got some resistance at 53.60, I'm going to say 66. Actually, it's 53.58. So let's call it 53.60. That would present 2.618 for an intermediate third wave. We're looking for the fifth, and we're looking here. Not likely going to contain everything unless I move this up, this high, up to intermediate wave 3, which would have to put a conclusion that this all finished up here. Now, I can bring this down, and we're going to take a look at the 1 hour chart. So again, we're inside 1, 2, 3, 4. And could we do that? Could we say this is done? And actually, we could. We could go 1, 2, 1, 2, 3, 4, 3, 4, 5, a 3, 4, 5. And that would put this minute 5 up here. And then we have this ABC down. And so if anything, this could be wave A of this 4. That would be the minor wave 4. And then we're doing the B wave up, and we come back down, and we do get deeper into here. Now that's one look. And it's more apparent over in the NASDAQ than here. So that's one look. If that switches, and a lot will be determined by what happens in the next day or so with this rally. If this rally starts to break back above 5,300, and then of course if it breaks above 5,345, then we're going to be looking for 5,340. Excuse me. Then we're going to be looking for it to be a minuet fifth wave, and then we have our fibs actually right here around 53.62, 68, and 53.58. So all of the fibs kind of match up there, except for the minute. The minute kind of comes in, actually it does. So I got the minute coming in at 53.58, and I've got the minuet coming in just above that level on its move of equality, where this would equal the fifth wave would equal the first wave, also in that area. So we're starting to get lined up where it could be finishing up, and then we come back down. So again, not looking for a whole blast, but getting itself back up towards 53.58, and that would finish minute wave 5 and also minuet wave 5. And I should have said that the other way: minuet wave 5 and minute wave 5, and then the minor third wave. And that all could happen right up in here. So we have all the resistance is all stacked up right in here, and that all could finish real quick and be done. And then we'll be coming back down into this area. Again, this is the marker for a minor fourth wave, where we'll be looking for it to come down into the fourth wave of one lesser degree, which is minute. And there it is. So that's why I'm leaving that there for right now. So again, if we need to change, it's all going to be told, because right now, under this particular view, we need to see the market break back above 5,300 and then up above 5,325, 5,336, and on or 40, and then onwards up towards that 53.58 to 53.63 number, that area, to complete the fifth and the third. So I'm going to bring this down, and we're just going to keep taking a peek as to what this actually kind of shows us. And here I can open, come on, I can open this up, and we can take a cleaner look inside. So this presents its own problems here, because this actually looks like, 3 but it is, and I'm going to leave it as a wave 1, and this being a wave 2, and then we start to climb wave 3 here, wave 4 there. And now we see this clean up a little bit. So our resistance zone is going to be 53.58 to 53.68, and that is also for both. That would be for the minuet wave 5 and then also the minute wave 5. They're all right up in there. And that could complete the whole picture for us. And then put that that minor wave 3 above. Now, moving averages, a little bit. The 200 on the 4-hour chart kind of moving sideways. Even with all of that, it started to perk a little bit on here. It would continue to turn higher. On the 4-hour chart, we never did get the total breakdown. Right now, we still have, the 20 is on top, the 13 is both flat. We'll be looking for that to kind of, if it continues to climb, then we're looking for that to revert, and then it's back in alignment to continue to move higher. So without that additional where we broke below, as we did over in the NASDAQ, where we started to break below there and started to break below on a shorter time frame, the moving averages, and they were all kind of pointing lower. So it's going to take a little bit more to get that all straightened back out and to move higher, although it is working right now in doing so. So here a little bit different. Again, this is the cash market. So right now, I am going to continue to look for at least a move back up towards, and there will be new highs, but above 53.40, which is the high for Minuet Wave 3, and then up towards 53.58 to 68 before we get another corrective phase, which brings us down further. So again, and again, this all could be, this could happen, and then up until June expiration. This was April expiration. The June expiration is supposed to be bigger. And it is bigger in terms of positions. So what's to say that we can't come flying back down? We did here for this last Friday's expiration, and then just rallied right back up. But the balance of the day came down, monetized what they needed, and moved back up and monetized the balance. All right, so let's go over and take a look at the futures market. And let me bring it back out. The count is exactly remains the same in that we are still 3, 4. And here in the future, I don't display. I got to change that. Hold on. And we want this one. I'm going to come down here. And let me just go in and show you that on the future, I believe it's still available, but in terms of resistance, but it's got to be getting down there. So you can see where we are, right to where we're closing, 53.07. So we've been above it to 53.40, and therefore I took it down, at least on the futures basis, because I thought it had broken it far enough, but it came back down, sank back in here. So, but still, we're now back above it and likely going to continue higher. So I'm feeling that the S&P is not under that type of account, leaving it at the alternate, basically because stranger things have happened in our market. And for all I know, they're just going to turn it around and prove to us that it was the B wave. So I'm running it, at least the S&P, I'm running on that it's the primary 5th wave up to complete that larger cycle, 3rd wave. Now, within it, same deal, intermediate 1, 2, minor 1, 2, minuet. Wow. It's early in the morning, and I'm just learning to get my talking together. Intermediate 1, 2, minor 1, 2, minute 1, 2. So, and again, the big difference here between the NASDAQ and the S&P is that the S&P came down, and if this were to be 1, 2, and then this is 1, 2, and this was the 3rd, the 4th overlaps wave 1. So 4th, this would be minor 4, it overlaps wave 1. So therefore it can't. And therefore I'm leaving it 1, 2, 1, 2. So therefore up here is where we get 1, minute wave 1, 2, minute 3, and 4. And then we got this, the final, the minute wave 5 of 1, 2, 3, Friday completing minuet wave 4. The rally back up does suggest that that does stay in place. And we come up back above 53.68 in the futures market and start to head up to where we have a cluster, and it's above 5,400. So it's 54.55, pretty much both. They're sitting right there at the same place. So let's say 54.50 to 54.55 to put in that top for minuet wave 5, minute wave 5, minor wave 3. Now, here a little bit different in the futures market, where intermediate wave 3 is up here around 55.63. Now, what's going to be more important again is once we start to get this third in and the fourth comes down, this is going to be our zone. That's where we're going to be looking again, right in here for that fourth wave. And that is again the April lows that we saw here in the future as well. And that'll come down. And if it holds, then we're going to be looking for a fifth wave rally. So while this marks for the intermediate third wave, does not necessarily mean that that's where the market needs to go. It's just a marker in terms of resistance on an intermediate degree. So obviously we can finish intermediate wave 3 below, but we need to first get through minor wave 3, minor wave 4, and then come back up on minor wave 5, which again might take us all the way up to here. So still upside to come in both of these markets, still staring another drop and kind of a substantial drop once we get this complete. I'm going to bring this down. Let's move it to the 4-hour chart and let's bring it into focus this way. So again, here we have minute wave 4 underneath there. And then we have 1, 2, and then 1, 2, 3, 4, 5 of 3. A, B, C, 4, and then this tremendous rally. After that strong drop, and then a tremendous rally from 52.15 back up to almost 50, it got above 5,300, but then closed just below. That was it was a strong drop, but even a stronger rally back up to finish off Friday's expiration. That tells us that we're likely going to continue, because this has to be 5 waves. So again, looking for an initial move wave, minuet wave 5 would be equal to minuet wave 1, and that comes in at 53.66. Once we start to break there, we don't really, we're sort of into what I call a black hole. We don't have any resistance up here because it just didn't really exist. Now, I likely could throw, once we get additional moves here, we can put some additional fibs to try to fill inside here. And that's going to be on like a 1 hour, 15-minute or lower basis. But right now, in terms of the bigger picture, we'd be looking for wave 5 to come up to here, put in that minuet wave 5, the minute wave 5, right? Because minute wave 5, here we have it, 54.54. So the outside on all of this is that this minuet wave 5 will go into that same area as minute wave 5 would be expected to do. So it's going to be a little bit interesting, because again, we have other resistance here to also complete the same move. So this might provide a pause. Maybe we get the 1, 2, and the 3, and then we kind of drop back, and then we rise back up. Now, I can't say definitively, because all we really need to do is get ourselves above this high, which is 53.68. And we have resistance just underneath it, but it could poke its nose above it, and then that could finish it and drop it down. We're going to wait and see what the market wants to do. But again, I'm thinking these are going to be the 2 areas that come into play next week. And we will be able to track it. Again, as I said, as this starts to break down, we'll be able to bring it into say, for example, the 1 hour chart and look more closely just at what's happening here, right? Because this is 4, and now we're in, and you can see it was just one big straight rally. So if anything, all I can say is like sub minuet 1 of minuet wave 5, and then we pull back a little bit, and then we go back up, and a third, and then we'll start to add fibs, which will start to fill in the blanks between these 2 points. So basically, looking for a little bit of strength to come back in the market. Now, again, what we're also going to be looking for is next week, the economic data that'll be coming out is going to be, again, all focusing on we have the S&P Flash Manufacturing PMI and also the Services PMI. We have ISM on Monday, S&P Flash Manufacturing Purchasing Managers on Monday, construction spending, and auto sales throughout the day. We have factory order and job openings. So then we begin to focus on jobs, on ADP employment, on initial jobless claims, and then again on Friday, non-farm payrolls. So we have the whole employment report for May due out on June the 7th. Also, June the 7th is the last day for when NVIDIA splits. I believe after the close, NVIDIA will split 10 for 1, and then that will come into effect come Monday morning. So whether they're going to want to push this as high as they can get it to get the highest starting point for the post split market, yet to be seen. And we know that that could then give all of our markets a strong boost. So again, Tuesday, factory orders, job openings. Wednesday, ADP employment, ISM, U.S. productivity, and the trade deficit. And then, of course, S&P Flash Services PMI. On Thursday, initial jobless claims, all by itself. And then on Friday, consumer credit, wholesale inventories, and the monthly U.S. employment report. All right, so that's going to be it for today. The next Elliott Wave daily update will be on Monday, June the 3rd.